Hey guys, and welcome back to my channel. If you're new here, my name is Kristine, and in today's video, I will be talking about how to analyze markets and how to pick the best one to invest in for real estate. So if you do not know, I am a fellow beginner real estate investor myself. So I am going to share the exact strategy that I use to do this analysis with you guys. So if you guys like this video, give this video a big thumbs up, subscribe to my channel, follow me on my Instagram and my other social media accounts, and let's get to it. So like I said before, I am a beginner real estate investor myself. I currently have one duplex back in New Jersey in the area where I grew up, and I currently now have a house in Charlotte, North Carolina, where I just moved about 3 months ago. And this primary home is then going to be converted into my next rental property. So this video is great for other beginner real estate investors who are looking to buy their first or second rental property and, want to learn about this market analysis, or for some people who just want a refresher and information on how to do it themselves. So before I get into it, I do want to say that the first step before doing any market analysis and picking your market is to figure out your why when it comes to real estate investing. Creating a vivid vision is super important because picking a market will be affected by what your vision is. You need to have an idea of what your goals are in life and in real estate, and that is going to influence the kind of market that is best for you. It's very individualized depending on the person's goals. What I'm looking for may not be what you're looking for. So I just wanted to say that and make that clear because it's super, super important to not miss that step and definitely figure out and identify what your why is with real estate. Another thing that ties into your goals and your vivid vision is to figure out whether cash flow is more important to you at this time in your life or is appreciation. Why are you investing in real estate? Is it because of the tax deductions? Is it because you want to quit your W-2 job and get cash flow in your pocket? Is it because, there's a combination of things? It really is dependent on what your individualized goals and needs are. So all of those things itself is going to affect the market that you decide to choose and invest in. So once you figure out all of that, you can then start your market analysis. I actually use a Google sheet that I constructed from joining groups, from listening to podcasts, from reading books, and I am going to share that for free with you guys. I will put the link in the description box below so that you can make a copy and use these metrics. So you don't have to take notes during the video. I'm going to include all of the information in the sheet, including the websites that I use, the numbers that I try to go for and go by, and all of that. Just tune into the video and take note and pay attention as to what I'm doing. So when it comes to analyzing a market, there are definitely a couple of metrics that I use just in phase one of picking a market. There are going to be several other phases to do as well as you do a deeper dive into analyzing and selecting a market, as well as analyzing and selecting the type of properties and each property that you're considering investing in. So this is just the first surface level analytical type of analysis where you are just doing a quantitative analysis as to whether this market is a market that you want to invest in. So I'm going to go over these metrics with you guys. I have also personally used this market analysis when I decided to move to Charlotte, North Carolina just a few months ago and pick a market not only to invest in real estate in, but also to settle down in. I specifically used these metrics to do my own analysis and make a whole move to a different state and then pick a new market to invest in. I also want to say that market analysis involves a lot of online research. So Google and all these other spreadsheets and data and websites are going to be your best friend, and they're going to be very helpful. So let's use Charlotte, North Carolina as an example. The first metric that I want to use is, do I have a competitive advantage in this market? So that is typically the first thing I think about when it comes to picking a market to invest in, because often it's easier to invest in a market that you have a competitive advantage. And what exactly does that mean? For example, when I bought the duplex back in New Jersey, I had a competitive advantage in that area because I've lived there for 20 whatever years until I bought that property. I've lived there for all of my life, went to school there, I have my family there, I was raised there. I had a competitive advantage because I knew people there, I knew real estate investors there, I knew my realtor there. I had a few people to kind of guide me, as well as my own knowledge of the area to help me with my real estate investing journey. So that itself gave me kind of a leg up compared to someone who didn't have that experience and grew up in New Jersey or knew people there. Another thing that would give you competitive advantage is if you went to college in that area. So I specifically went to college in New Jersey as well, but say I went to college in North Carolina, then I would have a competitive advantage in North Carolina because then I would know the area. I would have a general idea of what the neighborhoods were. If I had family in a certain area, if I know a real estate investor in a certain state, certain market, and they're investing in a certain market, then you have a competitive advantage there because it will be easier for you to then build a team because you have some resources there already. So I always like to first make a list of all the markets that I would possibly have a competitive advantage. And then those would be the first markets that I would then analyze when it comes to doing market analysis and research. So when I decided to choose Charlotte, North Carolina, I actually did not have a competitive advantage per se. Now I have a few real estate investors that I do know. I have my realtor, I have a handyman. I'm starting to build my team here. But at first, I really did not have a competitive advantage here. So I really took a leap of faith when I decided to move here and invest here. So that is the first metric. The next one is population growth. So I like to look at population growth over 10 years and also year over year. So if you look at my Google sheet here, I've concluded that Charlotte, North Carolina has a high population growth over the last 10 years. And then over the last 1 year, their population growth was 2.38%. And then on the bottom of my spreadsheet here, I wrote down goal numbers, kind of ranges or goal values that you're looking for. So you're obviously looking for an increasing number. You don't want to invest in an area where it's declining. I will say that in a lot of the markets in the Midwest, the population growth might be declining because those are very cash flow heavy markets. They're still very popular because they are very high cash flowing markets. But for me specifically, since I am not looking for cash flow, I have a very steady job and I can work part-time. I like working part-time. My boyfriend has a full-time job that he works remotely and gives us a steady amount of income. So I do not need the cash flow. I am more of an appreciation investor. I want to have a increasing positive number for population growth because that will signal that people are coming to the area and that will drive more demand, and that will affect house prices and make them go up. So that is what I want to see. So to find population growth, you can just do a quick Google search and it will pretty much tell you. You can just Google population growth over the last year in Charlotte, North Carolina. For population growth, you can also use websites such as Data USA or Census Bureau or citydata.com. And all of these websites are included in my sheet to make it easy for you and you don't have to be confused about where do I find all of these, numbers to put in this sheet here. So the next metric is wage and income growth. So this is really important because when I think about what my goals are in real estate, I want rental income to increase every year. I want appreciation to happen. This means that the residents that live in that area need to also be having slow, steady income increases in order to keep up with rental increases and things like that. So when it comes to wage and income growth, this is really important because when I think about my real estate goals, I want to, slowly raise rents every year because, you want more cash flow. Things also get more expensive in your real estate business. So you have to keep up with that. And the tenants that are going to be renting your property need to be able to afford those rental increases. And that would be helpful if they're making more money from their jobs, kind of black and white there. And the way that you can find this metric is you can use one of the websites that I listed before, datausa.io. Other websites you can use is the Census Bureau. And you'll notice that for a lot of these metrics, there's kind of a repetition. You can use a lot of the same websites. Google is always a good one. Data USA has a lot of them, citydata.com, bestplaces.net, the Census Bureau, things like that. So you can just kind of keep all the tabs open and you can find the numbers that you're looking for and then input them into the spreadsheet. So the next one is main industries. You want to find out what kind of industries are in the market that you're interested in investing in. So for Charlotte, they have the main industries as finance and insurance, healthcare and social assistance, retail, trade. And in the market, you want there to be a variety of jobs because if the market is only relying on one business, that is kind of very risky. and you want to minimize that risk with having many different businesses there to bring people to that area. You want to bring tenants that will need housing there, etc. So the way to find this metric is just do a simple Google search, and other websites that you can use is, again, Data USA or citydata.com. Another important metric is crime rate. And I don't think I need to explain this much, but it really depends on the investor. I personally invest in low crime neighborhoods. There's going to be crime everywhere. So you really just have to kind of pick and choose and decide what you're comfortable with and what your risk tolerance is. You can find deals in any type of market, regardless of the crime. So I personally prefer lower crime rates. You want to have that number decreasing. And the way that I find this metric is just doing, again, another quick Google search. You can also use websites like neighborhoodscout.com. And that gives you a lot of information on that market's crime rates. The next metric is median rent. This is important because this also ties into the other metric. So the way that you can find the median rent is you can just do another quick Google search, or you can go on Zillow.com. That's one of the favorites that I use. I use Zillow to not only look up median rents, but also to look up rental rates when I'm analyzing a specific property and underwriting and running the numbers for that. Other websites that you can use is Rentometer. I like Rentometer, but you do need to, I think, sign up for a pro account to get unlimited analyses. I don't really use that as often as I use Zillow, and you can also use neighborhoodscout.com, but I prefer Zillow. And then to get the median home value, you can do, again, a quick Google search, or again, you can use Zillow and neighborhoodscout.com. So when it comes to median home value and median rent, you can kind of do a quick 1% rule. And if you don't know what the 1% rule, it's just a very quick way to analyze whether a deal is a good deal or not and whether you're going to be cash flowing from it. So for example, if you buy a $100,000 property, you want to make sure that you're going to collect at least $1,000 of rents in order to be cash flowing from that deal. In this case, that median home value in Charlotte is $391,000 and the median rent is $1,930. So you can see that that definitely does not meet the 1% rule. In fact, it doesn't even meet half of that. It's 0.49%. I mean, right now the market is just really challenging. Again, Charlotte is kind of more of a market where I'm making more of an appreciation move, not cash flowing. So that is why I don't really worry too much about that. And also, I believe that rents are going to be going up significantly. And the strategy that I use is median term rental. You're renting out your unit as a furnished rental. And with that, you get higher rental income for that. And this is typically, 2 times to even 3 times the amount of normal rent for a long-term rental. I don't pay as much attention as to median rent. When I look into market, I use websites like Furnished Finder and Zillow to look up comps for medium-term rentals in that area. So with medium home values, typically if there is a higher purchase price of the home, if there are higher home values in a market, that's usually more of an appreciation market. Whereas if there are lower home values, say in like 100K range, 200K range, those are more cash flow markets. Since I'm more of an appreciation strategy, I like home values that are in the higher ranges. And that brings us to the next metric, which is the rent versus home price. With this metric, you just divide the median monthly rent by the median home value and you get the percentage. And if it is greater than 1%, that signifies cash flow. So as you can see here, and like I said before, Charlotte, North Carolina is not a cash flow market. It's more of an appreciation market. It's a little bit of both depending on what strategies you use. And my favorite metric, appreciation. So Charlotte, North Carolina has 3.7% appreciation. You want at least 4%. The way that you can find this is, again, using Zillow, one of my favorite websites. And another way you can find this metric is by asking your realtor or your team. So when my boyfriend and I bought a house in Charlotte, North Carolina, we would send the property to our realtor and to our lender, and they would send us information about that neighborhood, which included information about appreciation and expected appreciation in the next couple of years. So that was super helpful to get that breakdown from our team and gave us even more insight into the market. But just to get a general idea of what the appreciation is, you want it to be, about 4%. 3% is historically average, or obviously you want higher appreciation. So Charlotte, North Carolina is, right there. The next metric is whether it is a landlord or tenant friendly market. So in New Jersey, where I invested and bought my duplex, that market is actually tenant friendly. They have pretty strict landlord laws in New Jersey, but that is my hometown. That's where I had a competitive advantage, and that is where I bought my first property. But going forward, I would rather invest in tenant friendly markets, and it will just save you a lot of headache in case of evictions or other legal situations that go on. Charlotte, North Carolina is a landlord friendly market, and you just do a quick Google search and you will find out this information. And the last metric that we're going to look at in our market analysis is schools. So Charlotte does have a lot of good schools, specifically the house that my boyfriend and I purchased. The schools in this area are rated very high. So you want to have a market where there are very good schools, because that is going to attract families, that is going to attract tenants, that's going to attract people to that neighborhood. So the way to find this out is doing a quick Google search or using websites like greatschools.org or schooldigger.com. So that really wraps up market analysis. Another thing that I wanted to note is that it's really helpful to connect with a real estate agent in that market that you want to invest in, because they will also give you a lot of insights on the market and a lot of these metrics that I discussed. So when I connected with my real estate agent, I actually found her through BiggerPockets Agent Finder. So I highly recommend that. No, I'm not affiliated or sponsored by them, but they're very helpful. And I want to give you all the information that I found from my realtor. She was able to provide me with 3 different websites that were really helpful about the crime, schools, and everything about the Charlotte market. So I have also included that in my Google Sheets. It's crimemapping.com, mcmap.org, and charlotte.axos.com. So that is pretty much it for today. I hope this video was helpful and is helpful in your real estate business. And if you guys like this video, again, give this video a big thumbs up, and I will see you in the next one. Bye.